South African consumers are struggling to make ends meet. The National Credit Regulator says although the South African Reserve Bank has left the repo rate unchanged, this at 8.25% for a second consecutive time, consumers are increasingly becoming frustrated.
Credit is on the decline. I would say your credit providers are starting to stick to their affordability guidelines and close taps. And we've noted in the last quarter, 15 million credit applications were done, and about 10 million, which is 70%, were actually declined, which essentially means you're seeing more and more, I would say, consumers being declined for credit. On the figures that were released by the SAP, they are aligned with what we are noting.
The Reserve Bank has highlighted higher debt repayment as a major challenge for cash-strapped consumers. The higher cost of living has seen several consumers taking up new loans to supplement their incomes, but over time some have started to default.
For banks that do more unsecured lending, you'll see that the number is a lot higher. And this is what we do in terms of the working with the banks. From a financial stability point of view, on a quarterly basis, we track how big is the growth in non-performing loans and whether that has implications for financial stability. But we have seen self-correction on the side of the banks because this is what they have to do in terms of being risk-based in their lending. Hence, one would have seen a slowdown in credit extension as well.
Debt consolidation service providers say they're picking up pressures on bonds, vehicles and loans attributed to the hikes in the prime rate, with pressure falling on disposable incomes that have not changed for years in many companies due to a sluggish economy.
For the group that borrowed, generally for the first time, so some of our younger South Africans who borrowed for the first time to buy a house, like you indicated, during the low interest rate period, those are the ones who are seeking help the most currently, because what's happened is, as you articulated well, there's this unexpected sudden increase over an extended period of time of 475 basis points. And many of them would not have seen, the global financial crisis and the impact thereof in the late 2008 to 2009 period to know what happens with interest rates. And they were probably borrowing a bit too close to the edge, even though it was for a house or for a vehicle. And I think what's happening now is, the obligation to pay for the house, to pay for the vehicle is eating away at their disposable income. So what we're seeing is an elevated share of take-home pay being needed to essentially service those debts.
Consumers have been encouraged to maintain a healthy credit record by approaching their credit providers for help in managing their debt. It's also important for one to be more transparent on their challenges, this with their lenders for interventions. Erode, SABC News, Johannesburg.